I want to give you 8 steps that everybody can take right now to maximize your credit score. Step 1, you have to have a copy of your credit report. Everybody is entitled to at least one free credit report a year from annualcreditreport.com. This is the only place that you should be getting your credit report. Please never pay to get your credit report. It is free at annualcreditreport.com. All right, you're going to want to go in there, create an account, put your social security information, and then immediately you will see all 3 credit bureaus. By the way, it's going to ask you which credit bureaus you're going to want to see. You're going to want to see Experian, TransUnion, and Equifax. Get them all because they all report differently, and you're going to want to make sure all the information on your credit report is accurate. You can notice if you've got a credit that's, something on your credit report that is not correct. Maybe you paid something off and you have proof of it, and it's still reporting on your credit report. You can dispute that, you can get that cleared up, and that will help your credit score. Step number 2, sign up for free credit monitoring. There are many places you can get free credit monitoring. Experian has one. myfico.com is another place. Your credit card or your bank may offer this to you. Please do not pay for this, okay? Now, I want you to know when you have your credit score on, let's say, myfico.com, the score that you see and the score that I as a mortgage lender will see when I pull your credit score will be slightly different. A credit score for a mortgage is going to be a little bit lower because the algorithm for calculating a mortgage FICO score is different. Don't worry about that. What you're going to want to do is maximize the score that you can see, because if that's going up, then your mortgage credit score is going up. All right, now that you have your credit report from annualcreditreport.com, I want you to print it out and use it for step 3. So step 3 is write down in a spreadsheet all of your open credit lines, all of your available balances, all of your credit limits, and finally, how much interest you are being charged for each of those open credit lines. A lot of people are unaware that they're paying 25% interest on their credit card. They might be able to use a different credit card that they already have open that has a much lower rate. So you're gonna want to pay special attention to that. The best way to do this is on paper. So if you don't have access to a spreadsheet, go on Google Sheets, create a little spreadsheet, or write it down on paper. See it with your own eyes and know how much you're paying in interest. This is going to be huge and eye-opening for you. All right, so now that you have your balances and your credit limits all written down on a spreadsheet, you're going to want to calculate your percentage of usage. And the way to do that is simply to take the outstanding balance that you owe divided by the credit limit. And that's going to tell you how much percentage of that credit limit you are using. And first rule of thumb, keep it under 30%. A simple way to get that credit percentage usage into that sweet spot of 30% or less is step number 5. And that's ask for a credit line increase. It might be a long time since you've gotten a credit line increase. Let's say you started with a credit card and you've got $5,000 limit on it. Maybe you've been with that credit card for several years and you've paid on time. They might up that to $15,000. And then all of a sudden your percentage of usage looks a lot better. Your credit score is going to increase because of that. Step number 6, never miss a payment. I always suggest setting up everything for auto pay for at least the minimum. So that way, if you don't have the money that month to pay the whole thing off, you have at least made the minimum payment and you are never going to incur that dreaded 30-day late on your credit report, because if you start getting those, your credit will drop. I've seen people's credit drop 50 points just because of some 30-day lates, and that is definitely not what you want to do, especially if you're buying a house. Step number 7 is to pay down some debt. If you do have a lot of debt, not only is that a financial burden to you every single month when you're paying those minimum payments or trying to pay it down, but it's just such a burden on you spiritually as well. I really do believe that if you have a clear financial picture, you're going to have a clearer mind and you're going to have a clearer heart. You're going to be able to focus on other things that bring you joy rather than the burden of debt. So if you do have debt, not only is it going to clear you up spiritually, but it's going to help your credit score. So start with the smallest balance first. So what do I suggest? There's 2 ways to do it. You can either start with the highest interest rate credit card that you have that you need to pay down, or if you want a little psychological bonus, you can start with the smallest balance that you own and just pay that off. If you have that, do what Dave Ramsey suggests and snowball it to the next credit card and keep going until you have cleared out first all of the store credit cards, all of the smaller credit cards, and then finally you've paid down the major credit cards. And that leads me to my final and 8th step, and that is never close a credit card. Once you have it open, keep it open. They may close it on you, and that's fine, but don't willingly close it, because that can actually lower your credit score. So the credit algorithms like to see that you have available credit and you don't abuse it. They want to see people who are very responsible with the amount of credit that they are given. So if you have a Macy's card, you use that over Christmas, pay that off, keep it open, don't use it anymore. All right, we're gonna minimize our credit usage, only use those major credit cards that you do have, keep the balance always at least under 30%, ideally 1%, and your credit is gonna soar. And when that happens, you're gonna be in a much better position to buy the home of your dreams. And not only that, you're just gonna feel a lot smarter and a lot better. So tell me, what are you thinking? What do you see happening with your credit score? What's your story? I'd love to hear it in the comments, and I'd love to help you, and I'll see you at the next video.